Hello, financial fans. Welcome back to another stock analysis. Today, we'll be covering Seagate Technology's stock ticker STX. Seagate is a manufacturer of mass data storage, like an HDD or an SDD, that I'm sure all of you will have in your PCs. Currently, they're sitting at a $10.86 billion market cap. Their revenue in 2022 was $11.66 billion. Their dividend yield is currently 5.32%. 46% of their revenue is generated in Asia Pacific region. 42% of their revenue is generated in the Americas region, and the remaining 12% in the EMEA, which stands for Europe, Middle East, and Africa region. In the HDD and SDD sector, they currently have a market share of 43%. With competitors like Western Digital having a 44% market share and Toshiba having a 13% market share. To determine the final value of the company and our stock price, we'll be using a margin of safety. This margin of safety will be calculated by looking at financial ratios and the financial health of Seagate. This will be done by a scale. When a number in the scale is bright red, 5% will be added to the margin of safety. When it's orange, there will be no change in the margin of safety. When it's light green, 5% will be deducted from a margin of safety. And when it's bright green, 10% will be deducted from a margin of safety. When we're using a scale of 3 colors, bright red will mean 10% added to our margin of safety, orange will mean no change, and bright green will mean a 5% deduction from our margin of safety. First ratios that we'll be looking at are the EBIT growth and the margin growth. As we can see, the EBIT has actually gone down over the past years. Though, in 2016, or from 2016 to 2021, they've managed to regain some of the EBIT. The average growth during this period was only 3.08%, which is in our orange part of our scale, so no change in the margin of safety. The margin growth, similar to the EBIT growth, got a little bit of a hit, but they also managed to stabilize that as well. On average, the growth was 5.51%, which means a 5% deduction from a margin of safety. The next two ratios that we'll be looking at are the dividend growth and the payout ratio. The dividend has gone up a few times in the past years, going from $1.72 a share annually in 2014 to $2.80 annually per share in 2021. The average growth during this time was 7.57%, which means a 5% deduction from a margin of safety. The payout ratio of Seagate is currently sitting at just under 54%, which means no change in our margin of safety. The final two ratios that we'll be looking at are the debt to equity and the return on invested capital. As we can see, the shareholders' equity is far smaller than the liabilities that Seagate currently has. The shareholders' equity is this low mostly because of negative retained earnings throughout the years. Thus, we get a debt to equity ratio of 46 times, which means 10% added to our margin of safety. Return on invested capital for Seagate is looking a little bit more bright, sitting at 27% return on invested capital. On our scale, we can see this is a 5% deduction from a margin of safety. Let's go look at the valuation models next that we'll be using to calculate the intrinsic value of Seagate. The first valuation model that we'll be using to determine the intrinsic value of Seagate is the discounted cash flow model. I've imported the free cash flow going from 2012 to 2021. Over these years, the average growth was actually negative at minus 6.3%. Because we're calculating the lifetime expected growth of Seagate Capital, I've gone with close to no growth, going from 10% of the average growth, which is minus 0.63%. With this, we can calculate the future free cash flows of Seagate and determine the terminal year of valuation. For this, we'll be using a discount rate of 9% and a perpetual growth rate of 3%. Adding all the present values of the future free cash flows, we get a sum of free cash flow, which is just over $14 billion. To get our equity value, we have to add the cash and equivalents and subtract the total debt that Seagate is bearing. Doing this, we get an equity value of almost $9.3 billion. To get a discounted cash flow price per share, we just have to divide it by the shares outstanding. The shares outstanding currently is 206 million shares. Doing this, we get a discounted cash flow price per share of $44.92. With the current price of $52.61, we get a downside of $7.69, which is close to a 15% downside. The second model that we'll be using is the dividend discount model. I've imported the dividend payouts from 4 years ago to current, and we have calculated the average growth rate of the dividends during this period, which is 2.68%. Since we once again have to determine the expected lifetime growth of the dividends, I've gone with 50% of the growth rate, which is 1.34% dividend growth. Dividend discount model price per share then comes in at $39.64. With again the current price of $52.61, we get a downside of almost $13, which is almost 25% downside. The third and final valuation model that we use, the multiple valuation. By looking at peers of Seagate and looking at their stock price and earnings per share, we get a PE multiple. With these PE multiples, we get an average PE in the industry, and we have to multiply it by the earnings per share that Seagate is generating. Out of this, we get a fair value for Seagate at $75.28. With the current price of $52.61, the upside here is $22.67. This is over 43% upside. Let's go look at the final overview of our valuation of Seagate. Looking at our final overview of our valuation, we have imported the discounted cash flow price per share, the discounted dividend price per share, and the multiple valuation price per share, and came to an average of $53.28. Before this, we have calculated the margin of safety using the standard margin of safety of 30%, adding 10% because of the debt to equity, deducting 5% for the margin growth, deducting 5% from the ROIC, and deducting 5% from dividend growth. Our final margin of safety is 25%. With this, we get a fair value of $39.96. With the current price of $52.61, we get a downside of 24%. I hope you enjoyed this video. If you have any companies you want to see me cover, please let me know in the comments. Thanks for watching.